हेलो एंड वेलकम एवरीवन, दिस इज प्रोफेसर सिद्धार्थ सुराना। आई होप यू गाइस आर डूइंग गुड और मैं तो हमेशा मस्त ही रहता हूं। वेलकम टू एस प्रो एडुकेयर एम्पावरिंग द प्रो इन यू। वेलकम टू द फर्स्ट लेक्चर ऑफ सीए फाइनल डायरेक्ट टैक्स क्रैश कोर्स applicable for May 24 and November 24 exams. This first lecture is majorly going to be in the nature of introduction so that you exactly understand what we are going to cover in this crash course, which is applicable for May and November 2024. So very quickly, first of all, this crash course is going to be applicable for both attempts, that is May 24 as well as November 24, because we are going to cover tax provisions applicable for previous year 22-23, that is assessment year 23-24. Effectively, we are talking about the Finance Act of 2023, which is applicable for May 24 as well as November 24 exams. Our full course lectures are already recorded and long ago they have already been delivered as per the demand of the students. Now the crash course is getting recorded for all the students who now wish to have a quick recap of all the provisions. So it is also necessary that at the beginning only we understand the difference between full course and crash course, so that you know whether this crash course is going to meet your expectations or not, or whether you are fit for the crash course, whether you should go for crash course or full course. The differences will be clearly laid down. If I talk about the duration, the full course we cover in approximately 220 hours. However, in crash course, the main target is to cut down on the time consumption, and accordingly, the crash course is going to take roughly 100 hours less than the full course. Logically speaking, in full course, we go into more detail. We go into the logic of every provision. We don't just learn the section, we also learn the reason behind creation of the section, which is why it takes more classroom time, and full course will be of 220 hours. Whereas in crash course, our main focus is to prepare ourselves only for exam, where we understand what is written in the law. We don't get that much time for logic because we have to obviously reduce the timing factor, which is why we have about a difference of 100 hours. The full course is available in two language options. North Indian students can go for Hindi plus English mixed variant, or students from South can go for only English lectures. Both options are available. However, the crash course will be available only and only in English language. Let me be very clear on this. Your exams are going to be conducted in English language. You have to give your interviews in English language. After qualification, you have to work in the English language. English may not be a measurement of intelligence, but at least exams are in English. So advisably, you should be doing the English lectures only. Of late, last few years, we have observed that a lot of North Indian students are also going for our English lectures, and this is truly appreciated, dear students, because end of the day, it is a language which you have to follow in your profession. As far as amendments are concerned, as I told you, Finance Act of 2023 is applicable. So all amendments introduced by the Finance Act of 2023. In full course, we cover in absolute detail, minutest detail, the reason, the logic, the announcement by Finance Minister, everything. So what is in the new section and what is the logic, everything is discussed. In crash course also, we will be covering all the amendments. However, we will be discussing what is the amendment, and we cannot use time for the question why. So the full course will cover why this amendment is brought and what is the amendment. Crash course will cover only what is the amendment. Still good as far as examination is concerned. As far as questions are concerned, in full course, we have two question books. We have a class question book and we have additional question book. So in the class question book, we have roughly 420, 430 odd questions, and we do 100% question solving in class. These 220 hours include those question answer solving in class part also. But in the crash course, because the students desire to save their time, they want to focus more on the knowledge part, and they say that, sir, we can practice the questions on our own. In crash course video lectures, there will be no question answer discussed. It is only going to be explanation. However, one good news for those students also who want the question answer separately is that when we do the full course and when we record the questions here, these questions, the recording files are saved separately. So we have part 1, part 2, part 3 of a chapter, and part 4 is only questions. So any student who is desirous of having these questions, all we can do is that the question answer recording of this full course can be made separately available. So when you will go to the website of SS Pro Educare, on that website, you will be having two options: only crash course or crash course with question answer, with different views. We have 1.1 view, we have 1.5 view, we have 2 views options that we give you, but there you can choose with question, without question. Honestly speaking, if you were to take my opinion, it is advisable that you go for crash course with question answer, so that you can learn the theory from the videos and then you can solve the questions like we do in a proper full course. Question answer file recording will be taken directly from the full course folder itself. Okay, so you can go for only crash or you can go for crash with question answer. My recommendation is to go for crash with question answer. If we talk about other explanation other than the question answer, whether it is the important topics or the small topics, in full course we do everything in absolute detail on the assumption that the student does not know anything. So ideally the full course where we do everything in detail is meant for those students who are learning direct tax for the first time. If this is your first time, if this is your first attempt, if you have not studied direct tax before, and listen, let me be clear. You have studied direct tax in inter, but you left it in options. You cleared inter only with the help of IDT. So there are a lot of students who are studying direct tax for the first time in life only when they come in CA final. Then full course is meant for you because everything, whether big chapter, small chapter, important chapter or less important chapter, everything is covered in detail with logic. When we come to crash course, we have to be very, very careful with our content. So what we do is, all the important topics, a topic like business profession or TDS or transfer pricing or capital gains, we cannot cut any explanation there. Please use your common sense. You all are CA final students. You all should understand this, that you cannot cut sections from chapters like TDS or PGBP. So what we do is, those topics we directly take our full course video. It's like a smart course. TDS, PGBP, capital gain, transfer pricing, these topics will be directly taken from the full course video. And as far as your small, less important topics are concerned, we will use our handwritten book, Exemption 4.0, and we will open the PDF of Exemption 4.0 in class, and the explanation will happen from that book only. So, in normal full course, even the small topics, everything I do in writing. And that writing time is also consumed in the video time. So, what we do is that writing time will be saved because we will directly take our handwritten book and all explanations will happen from the handwritten book itself. So, full course will contain big or small, important or less important topics, everything in complete detail. But crash course will contain the important topics directly copied from the full course folder and the less important topics directly from the PDF of our handwritten book. This brings us to a very, very important question. Sir, what study material will be covered? So, I write 7 books per annum. 2 are for inter, but I'll talk about final right now. 5 books. If you want to know which are my 5 books, let me first explain to you which 5 books I am talking about. 1, I have a theory book where 100% theory of your entire DT is covered. Wherever required in bare language, wherever required explained in simple language, all the theory is covered here. You can do your first time study from this. Then we have a question book. This is our class question book. This is the same question book which we cover these 420, 430 questions in class. And if you want, you can take the crash course with question answer. But of course, you will need the book if you are taking the crash course with question answer. You will obviously need the book also. So we will have a question book. We have MCQ book, highest number of MCQs across the country, roughly 1900 to 2000 questions we have in our MCQ book. Roughly 1900 to 2000 questions we have in our MCQ book. Highest number of questions across the country are covered in our MCQ book. So this is also the third book which will be provided along with the full course. Next, we have an additional question bank. Subjective questions, descriptive questions. Already we have about 420, 430 questions here. And then we have another about 500, 550 questions here. Entire study material, whether old study material or new syllabus study material. If you have any illustration in the middle of the chapter, if you have any questions at the end of the chapter, if there is any recent RTP, MTP, any question anywhere, it is going to be covered in this additional question bank. So this question bank is for extra practice of the students once they have gone through the theory. And last, of course, we have our handwritten book, Exemption 4.0. This is also the book from which we will be doing our small chapters in the crash course. This is also the book from which we will be doing our small chapters from the crash course. So if you are going for the crash course, this book is still mandatory. You should be having this book. Now, when anybody takes the full course, we give hard copy of all the 5 books. So all 5 books are given along with the full course. The only exception being, we have one full course variant for 1.1 view 90 days value. In that we don't provide the hard copy, we provide only the ebooks. Otherwise, in 1.5 views for 180 days and 2 views for 365 days, we provide all 5 books along with the course purchase in full course. Full course we provide all the books except 1.1 variant. In crash course, because the pricing of the crash course is too less, we will be able to provide you only the ebook of all the 5. So if you take the crash course, you get the soft copy of all the 5 books and you can acquire the hard copy separately, just like you can take question answer course separately. So your options are only crash course with question answer, crash course with question answer with hard copy books. E-books will be provided, but hard copy is optional. You can take or you cannot. My recommendation is that this handwritten book is mandatory, because without this handwritten book, you will not be able to follow the small chapters. So you will have to, under all circumstances, take this handwritten book. Plus, one day before your exam, you will be able to revise your entire syllabus from this handwritten book very quickly. Plus, soon when we will upload the amendment and revision lectures also on YouTube, so the entire amendment and revision batch is done from this handwritten book only. So under all circumstances, this handwritten book is mandatory. Without this, crash course is not advisable. E-books will be given, but hard copy is better. And then if you are taking only the handwritten book, then when students buy multiple books, a combo of books, handwritten MCQ and theory or handwritten additional question bank and theory, when you purchase multiple books, there are combo discounts, because we get a discount from the courier company when multiple books go together. We pass it on to the students. So it is advisable that in case you are going for crash course, 1, you should take the question answer course also. 2, you should also take the hard copy books, preferably all 5 books, but at least handwritten books is a mandatory, is compulsory, whether you go for crash course or you study the revision lectures. In full course, all the 5 books are given except those who take the 1.1. Okay. So more details about the pricing, etc., you can visit the website of www. You can visit our website SS Pro Educare. If you see the ticker below me, you will be getting the link of YouTube, Telegram, the website, everything. This is our new organization, SS Pro Educare. From now onwards, all my lectures, whether full course or crash course, will be available under the brand, under the window of SS Pro Educare, empowering the pro in you. Now that we have understood what exactly we are going to cover in this crash course, let us, ladies and gentlemen, go to the first part, our first chapter. The name of the chapter only is introduction. So we are done with this introduction, but now we go to that introduction where we cover the tax rates in the very first chapter itself. It is necessary that we cover the tax rates in the very first chapter itself, because all our upcoming chapters give us questions where we have to calculate tax liability. So only if we have calculated or learned how to calculate tax, we are going to be able to solve those questions. So what we will do is, the old regime of taxation we will be doing from the PDF directly, but there are massive amendments. The biggest amendment part is the new regime taxation rates have been drastically changed in the Finance Act of 2023, and thus what we will do is that new regime ka tax rates we will be directly taking from the full course ka video, which contains along with the amendments everything in detail. But the first thing that we will do is go and learn tax rates under the old regime. So this is the handwritten book that I am talking about. The very first chapter also is introduction. We have our, like always, 40 chapters in our index, and this is our very first chapter, introduction, where we are going to first do the old regime of taxation, which we will do from the PDF, and then new regime, because it has too many amendments, we will be directly taking our full course lecture of new taxation regime. This is how we are smartly designing the course, that whatever is required to be studied in detail will be taken from the full course lectures. So first chapter, introduction, starts by saying there are 7 persons. Now this is something that even CA inter students know: individual, HUF, firm, company, OPBL, local authority, artificial juridical person. You have to learn tax rates of all of them. First we learn tax rates previous year 23-24, assessment year 24-25, that is applicable for May and November 24. Tax rates for individual, HUF, AOP, BOI, artificial juridical person, because as we are aware, only they have slabs. Companies, firms have flat rate, so we'll discuss them together. Under this also, the first category is resident individual less than 60. Why less than 60? Sir, because equal to 60 senior citizen, equal to 80 super senior citizen. Separate categories are prescribed. So right now we go to category A. Senior citizen and very senior citizen will be category B and C respectively. But along with category A, where we are covering normal individuals less than 60 years like you and me, here we will also cover non-resident individuals, because as we are aware now, as I told you, that crash course is meant for those who are learning for the second time. Ideally, those who are learning for the first time should go for full course, because that is the only course that can do justice to you. This crash course is done on an assumption that students are not learning for the First time they have studied tax before, now they want a quick brushing of everything. So you should be aware that if you are a senior citizen, you are eligible for a higher basic exemption limit, that is 3 lakh for 60 years and 5 lakh for 80 years. But that facility is available only and only if you are a resident. That means if you are a non-resident, irrespective of your age, you may be 60 years old, you may be 80 years old. For non-resident, it is always going to be a basic exemption of rupees 2,50,000. And HUF, AOP, BOI, artificial juridical person also are going to have the same tax rates. HUF, AOP, BOI and artificial juridical person will also have the same tax rates. So basically, we are having same tax rates for individual less than 60 years, non-resident of any age, and HUF, AOP, BOI, AJP. So separate rates are given only for resident senior citizen and resident super senior citizen. No change since the last so many years. So first 2,50,000 basic exemption limit, no tax. Next 2,50,000, that is 250 to 5 lakh, 5% in that bracket. Next 5 lakh 20%, and anything above 10 lakh will be 30%. Then if you are a senior citizen means anybody who is of the age 60 years and above but less than 80 years, but only and only one, if you are resident, and two, you can become senior citizen at any time during the year or 1st April of the assessment year. So you have to touch 60 at any time during the year. It is equal to 60 also covered. Equal to 60 will make you senior citizen, equal to 80 will make you super senior citizen, but the benefit will be given only if you are a resident, and you can become 60 at any time during the previous year. The change that will happen is your basic exemption will be enhanced from 250 to 3 lakh. So up to an income of 3 lakh, there will be no tax, basic exemption. 3 lakh to 5 lakh, it is going to be 5%. Thereafter, it is same. Next 5 lakh 20%, and after 10 lakh, it is going to be 30%. And finally, if you are once again a resident, so higher benefit is available only if you are a resident. If you are a resident of the age 80 years and above, once again, you can touch 80 at any time during the year or 1st April of the assessment year. We will call you a super senior or a very senior citizen. So resident 60 years is senior citizen, resident 80 years is super senior. The change that will take place in your life is first 5 lakh, there is going to be no tax. Next 5 lakh, you will have to pay 20%, and after 10 lakh, like everyone else, you will be paying 30%. Of course, you are also aware that these are only normal rates of tax. There are some incomes that are taxable at special rate. Special rate means long-term capital gains, short-term on stock market, long-term on stock market, casual winnings. We have a full chapter in income tax law, that is chapter 12, where we are going to be having special rates of tax. The range is starting at section 110, and it will go on to 115 BBJ. 115 BBJ itself is a new section. It is an amendment. So till last year, special rates of tax chapter used to get over at 115 BBI, but now we have a new section 115 BBJ, winning on online games, Dream 11, etc. We'll talk about it when we do the special rates of tax chapter. What you need to now understand is only this much, that these rates of tax are basic tax rate on normal incomes. And if you have any special income, we will divide your income into two parts. Normal income will go in these slabs based on your category, whether you are normal individual, senior citizen or super senior citizen. But your special income will be taxable at special rates, whether it is long-term capital gain, casual winning, etc. However, whether normal or special, the tax so calculated is going to be only your basic tax. Once you calculate your basic tax, there are following changes that will take place. Change number 1, you will be eligible. People like him will be eligible for rebate, because rebate is for low income earning people. So what are the conditions to get your rebate? You have to be a resident individual and income up to rupees 5 lakh. Resident individual, income up to 5 lakh. Resident individual, income up to 5 lakh. If these three conditions are fulfilled, the actual tax or 12,500, whichever is lower, will become your rebate. Actual tax or 12,500, whichever is lower, will become your rebate. Three conditions: resident individual, income up to 5 lakh, actual tax or 12,500, whichever is lower. So the tax that we have calculated above, basic tax, will be reduced because you are eligible for rebate. However, if you are a super rich assessee, now we are talking about this guy. So do you see? I am so smart that I have kept both these photos next to each other. One day in all factors, in all terms, we will be next to each other. No problem. Okay. If you like it, you just type in the comment box, yes, we support you. Yes, we support you. Just type in the comment box, yes, we support you. Yes, we support you. Okay. Surcharge. Surcharge is extra tax for super. So rebate is reduction in tax, but surcharge is increase in tax. If your net taxable total income is exceeding 50 lakh, so listen, rebate will come at equal to 50 lakh, but surcharge won't come at equal to, rebate will come, sorry, at equal to 5 lakh, but surcharge won't come at equal to 50 lakh. Surcharge will come when it is greater than 50 lakh, 10%, greater than 1 crore but equal to 2 crore, so 15%, greater than 2 crore equal to 5 crore, then 25%, and greater than 5 crore, then 37%. So effectively we have 4 rates of surcharge. Up to 50 lakh, exact 50 lakh, there is no surcharge. But once you cross 50, then it will be 10% till exact 1 crore. Because 15% will come when it is greater than. So surcharge will keep on increasing when it becomes greater. More than 1 crore, 15. More than 2 crore, 25. More than 5 crore, 37% on your basic tax. Rebate is given in rupees, you can learn 12,000. Surcharge is given in percentage. So when it is given in percentage, you should be aware, sir, this percentage will be applied on what? Surcharge of 10, 15, 25 or 37 will apply on. Surcharge of 10, 15, 25 or 37 will apply on basic tax. However, some years ago, Auntie brought this amendment. Auntie said that these massively high surcharge, see 25 and 37 is too high. Already you are paying 30% basic. Because once you are in more than 2 crore, once you are more than 10 lakh, you are in 30%. So 30% basic, then 25, 37% surcharge is too high. So if you have the following incomes, which income? Stock market short-term capital gain, 111A. Stock market long-term capital gain, 112A. Other long-term capital gain, that means land, building, such things. 115AD, this is special capital gain for FIIs, which is covered in special rates of tax chapter, or dividend income. If you have any of these 5 special incomes, which 5? Let's be clear, which 5 special income? Then we will understand the applicability or non-applicability of 25 and 37. Which 5 special incomes are we talking about? 111A, short-term stock market. 111A, long-term stock market. 111A, short-term stock market. 112A, long-term stock market. 112, other long-term, dividend income and FIIs capital gain. If you have these 5 incomes, Mitro, if you have these 5 incomes, then in that case, surcharge of 15% will only apply on these incomes. Only on your other income, we will apply 25 or 37. Please listen to the statement carefully. I will be doing numerical example if required. Your total income will be divided in 2 parts. These incomes and other income. 25 and 37 will apply on other income if that other income has exceeded 2 crore rupees. On these incomes, we will only apply 15%, highest 15%, of course. If your income is less than 50 lakhs, there is no surcharge. If it is between 50 lakh and 1 crore, it is only 10%. If it is between 1 crore and 2 crore, it is only 15%. After 2 crore, we have 25 and 37. For that, we will check your other income. We will not check these incomes. On other income, we will apply 15. On these incomes, we will apply only. On other income, we will apply 25 and 37. On these incomes, we will apply only 15. On these incomes, we will apply only 15%. The highest that we will apply on these incomes is going to be 15%. And the rule is also this, that if because of these incomes, your total is crossing 2 crore. So if you remove these incomes, your total does not cross 2 crore. If because of these incomes, your total crosses 2 crore, then on the other income also, we will apply maximum 15%. This is a little confusing. And for this, I just need to make you do 2 examples. We are dividing our incomes into 5 special incomes and other normal incomes. The total will give you your net taxable total income. So normally if this NTTI crosses 2 crore, then we have 25% or 37% after 5 crore. We always check our NTTI 0 to 50 lakh, no surcharge. More than 50 lakh, 10% up to 1 crore. More than 1 crore, 15% up to 2 crore. More than 2 crore, 25% up to 5 crore. More than 5 crore, 37. We always look at the NTTI figure. But now they are asking us to divide our incomes into 2 parts. 5 special. Let's identify which are those 5 special. Short-term stock market, long-term stock market, other long-term, FII capital gains and dividends. Supposingly, these incomes are 2 crores and these incomes are 4 crore. So total NTTI is 6 crore. Now, when we see 6 crore is more than 5 crore, our instant answer is, sir, 37% surcharge. But what we will do is that 37, we will not apply directly. We will remove these incomes and check. Remove these incomes. Check only this. Is this exceeding 5 crore? No, this is only exceeding 2 crore. So what we will do is, on these incomes, we will calculate tax, because mind you, surcharge is not calculated on income, it is calculated on tax. Calculate tax here and calculate tax here. On this, you will apply 25%, but on this, you will apply only 15%. Means for applying 25 and 37, you have to check this figure. For applying 25 and 37, you have to apply this figure. If this figure does not cross 2 crore, let's take one more example. 2 crore, 50 lakh. So that makes it 2.5 crore. Normally, we look at this amount. So our answer comes as 25% because it is more than 2 crore. But you look at this amount. Is this exceeding 2 crore? No, this is not exceeding 2 crore. We are exceeding only because of this. Then in that case, whether year or year, we first calculate our tax, and on both of them, we will apply only 15%. Only two things you have to understand. If my other income crosses 2 crore or 5 crore, then 25 or 37 will apply only on this. Here my other income has not crossed, so I will apply only 15. 15 will come, 15 cannot go anywhere. Once your total has crossed 1 crore, 15 will come. Supposingly, the other income is only 10 rupees, no? Still 15% has to come. 15% is mandatory. The discussion is happening on whether 25 and 37 will come or no. 25 or 37 will come or no. For that, we are checking the figure of other income. For that, this other income has to cross 2 crore. Whether it crosses 2 crore or it does not cross 2 crore, 15 will come, 15 will come, 15 will come. Whether 25 will come, this is not crossing 2 crore. So 25 will not come. This is crossing 2 crore. So 25 will come. If this was supposedly 6 crore, so this would have been 37. That means for applying 25 and 37, we just check this other income figure. For applying 25 and 37, we check only the other income figure. Otherwise, based on the total, we can apply 10% or 15%, anything. But for 25 and 37, we check only this and we apply also only over here. Supposingly this is 100 crores, it will still be 15 only. Here we will never apply 25 and 37. Here we will always apply maximum, highest 15. That's how we apply or we make 25 and 37 inapplicable. So 25 and 37 will not be applicable to these special incomes. Plus, because of them, if you cross 2 crore, matlab your other income has not crossed 2 crore, then on everything we will apply only 15%. However, if you are an AOP having only company members, then highest rate will be 15. There is only one rate of surcharge, 15. So 25 and 37 is not applicable only. Marginal relief when your income is just crossing the surcharge threshold within the concept of surcharge. For example, assessee A has got income of 1 crore and assessee B has got income of 1 crore 5,000. So first we will calculate basic tax as per slabs. Here we will apply 10% surcharge because at equal to 1 crore it is 10. 15 it becomes only when it is greater than 1 crore. Here we will apply 15% because this is greater than 1 crore by 5,000. Now the problem is that the difference in income is only 5,000, but the difference in tax is coming to a massive figure. So what is the concept of marginal relief? The difference in tax cannot be more than difference in income. The difference in tax cannot be more than the difference in income. If tax ka difference is only rupees, if income ka difference is only rupees 5,000, then the tax ka difference cannot be such a big amount and the excess amount we will subtract. So if this is coming to 3093, this can come to only 3098. The difference in tax cannot be more than difference in income. That's your concept of marginal relief, again under surcharge. And finally, we apply HEC. HEC will be applicable first of all always, and it will be applicable at a rate of 4%. On what? Start with your basic tax. On basic tax, give rebate if applicable. Take surcharge if applicable. Of course, rebate surcharge cannot happen together. Only one of them will come, and on that amount apply 4% always. HEC is the only thing that remains unchanged throughout the income tax law. Old regime or new regime, individual or company, anything, it will be 4% and it will come always. Whether you are a case of rebate or you are a case of surcharge, HEC is always going to come. So this, ladies and gentlemen, is the old taxation regime of individuals, HUF, AOP, BOI, artificial juridical person. So under this introduction chapter, what are we left with? we are left with old tax regime of the other assessees. So in this book, the old tax regime of the other assessees like firm and company is in that respective chapter. Here I have mentioned that for firm and company, we will be doing in their respective chapter. But in my full course video of this year, I have covered old regime ka rates also of firm and companies. And I have then covered also all the new regime ka provisions, whether it is this new regime which is applicable to individual HUF, plus there are plenty of amendments if you observe here. Plenty of amendments that have taken place. Whether it is applicability of surcharge, whether it is applicability of rebate, everything has changed. One big change is that from now onwards, by default, you will be in new regime. The default regime will be the new regime. That means till last year, if we wanted new regime, we had to exercise option in our RO. But now, if you want old regime, then you have to exercise option. Means if you don't exercise option, they will put you in new regime. Okay, but that's only for 115 BAC. For the other sections, for companies, BAA, BAB, for cooperative society, BAD, it is all the same. So, old regime may you stay and you go in new only if you exercise the option. So, all this explanation along with the amendments, if I have to be honest with you, the new regime ka these entire slabs also have changed. Complete change, complete overhaul has taken place. It only makes sense that amendments like these and all others are the tax benefits that you have to forego. It only makes sense. There is also a new section 115BAE, which is a new taxation regime for cooperative society. It logically speaking that when the amendments are so big and so important, the whole regime has changed. It only makes sense that we can't crash this duration. This has to be done from our full course ka lecture. So at this stage, we are done with old regime of individual HUF, AOP, BOI, AJP. We will do old regime of company firm and then we go to the entire new taxation regime. That is going to be our next two parts of our introduction lecture, which will be directly taken from the full course lecture. And this is how we are going to go about our crash course, where we cover everything which is required in detail from the full course lecture, and whatever can be done from the PDF to save our time, we will be doing from the PDF of this handwritten book. I would once again like to remind you, because the other parts of the introduction lecture will be the full course lecture ka copy. I would like to remind you that it is advisable that you go for crash with question answer and with hard copy of books, and these lectures will soon be available for purchase. The first part of the lecture will be available and provided to you in the first week of January 2024, and 50% of the syllabus will be provided by that time, and the remaining 50% will be provided to you by the last week of January. So when you can take the lectures, you can start watching. By the time you complete that much, we will be providing you the balanced lectures in your crash course. Thank you for watching the first part of CA Final Direct Tax crash course introduction lecture. Have a nice day and continue watching the other parts which are taken from the full course lectures.